You are listening to Mining Stock Education.
If you look at all of our projects and add up all the metal we have in terms of all resources and reserves and use today's metal prices, each one of our shares is backed by over $9,000 worth of metal in the ground, trading at a share price today of about $15 or $16 a share.
My guest today I met last week on the evening cruise at the Rural Symposium. It's Mr. Rudi Fronk. He is the CEO, chairman, and co-founder of Seabridge Gold. Seabridge, a well-known company, trades on the New York Stock Exchange as well as the Toronto Stock Exchange. Rudi, welcome on to the show. After having an enjoyable conversation with you on the boat, I wanted to bring you on, talk through your career and the investment thesis of Seabridge on my show. So thank you for joining me.
Delighted to be here, Bill. Thank you.
So you went to school in a college on the East Coast of America that used to have a mining and mineral economics program, but no longer does. We start a conversation there? How did you get into this educational pathway of the mining industry? And just start us there and introduce us to the beginning of your career, please.
Okay, well, to be perfectly honest, my backstroke got me into Columbia University. And I went into Columbia in the engineering school. And after your second year, you declare your major. And at that time, I was so tired of rounding decimals off to the fifth decimal point. So I said, I want something that had more of a business focus, and maybe plus or minus 5 was good enough. And I looked at the different engineering curriculums, and mining was the one curriculum there that offered aspects to business and finance where the other engineering disciplines did not.
And that was at Columbia University, right?
Yeah, Columbia back then had the oldest school of mines in the Western Hemisphere, found in the early 1800s. Matter of fact, it was the first technical degree offered at Columbia University. But subsequent to that, the School of Mines has now shut down, and it no longer exists there at Columbia, which is unfortunate.
And what was behind the shutting down of the School of Mines there?
It was a money grab. The School of Mines had one of the largest endowments of any school at Columbia, and the university wanted that money. And the only way they can get that money was actually to shut the school down. So
they expropriated it?
Exactly right. Which happened to mining, by the way.
Exactly. And it happened to you later on in your career, as you shared with me last week. So after you get your degree, what's next?
I stayed on, and I found a home at Columbia. I then did graduate degrees in mineral economics and finance. And along the way, I had a professor who kind of took me under his wing. He was a gold bug, Malcolm Wayne. We would spend Friday afternoons at the pizza place. He'd buy me a beer, share a pizza, and we'd talk about the gold market. So at a very young age, in my late teens, I was indoctrinated into gold and what it meant, and just kind of built a path from there. When I was in graduate school, I actually started a consulting business. I merged that consulting business with the oldest mining consulting firm in North America, moved to Denver, opened up the Denver office. I was then hired by one of our clients who was a publicly traded mining company. And then soon after, I was plucked by a larger company in Toronto and moved to Toronto with my young family in 1993 to basically join a company as CEO focused on building mines in Central America.
And you are American then?
I'm American. I am dual now, though. We were in Canada long enough. We spent almost 13 years in Toronto, and the entire family got our Canadian citizenship as well.
So having started a business right out of college, do you consider yourself always having that entrepreneurial mindset, or did you develop that through your studies?
No, I think I always had that. I think that's something that either you have or you don't. And I was just one of those guys that had wanted to be an entrepreneur, wanted to build a business, so, wanted to learn. And that's the path I took.
So you said you were plucked and now you're at the helm of this company. Tell us what happened with this company.
Yeah, so it was a company called Greenstone Resources. They had just acquired a project in Panama. They were soon to acquire projects in Nicaragua and Honduras. They, over the years when I was there, they found a lot of gold through exploration. And we tried to build 3 mines in a 5-year period, which is a daunting task for even larger companies. And eventually the mines were expropriated by the government. As the gold price went down, the company was challenged to meet its financial obligations, and the government stepped in and expropriated the mine. It was also a time when the gold market had failed precipitously. When we started to look at building the mines, gold was in the low 400s. By the time the government expropriated the mines, gold was trading at about $2.16 an ounce.
So what did you do wrong, looking back at your executive decision-making process?
Yeah, I did a lot wrong. I mean, I'm the first to admit the mistakes I made in hindsight. I think first was thinking that we can actually build 3 mines successfully in 5 years. That was probably too aggressive of strategy. If the financial markets were strong enough and allowed us to do that, great, but not in a market that was deteriorating. Political risk is real. I guess I learned that the hard way. It does matter where your jurisdiction is in terms of what you're trying to develop. And Central America turned out to be a very challenging jurisdiction. I might point out that one of the mines we built is still producing gold like 25 years later and generating a market cap for the company that now owns it of excess of $1 billion. I think also learned that, allocation of capital is very critical. We took on a lot of debt to build those mines, and that's kind of what took the company down eventually. I think our industry does not do a good job in terms of allocating their capital as they build out their asset base. So we took those experiences, those lessons that I learned, and we formed Seabridge, trying to do things better the second time around. There was
Can you give a little more color on how you got that opportunity, though? Because I know that CEOs I've invested with, in which I've lost a meaningful sum of money, I will never invest with them again. So how were you given a second opportunity to lead a company?
Great question. And for that, I'll be eternally grateful. There was a group of investors that were at Greenstone that actually did well, because the stock did do well over a long period of time, and then it didn't. I think at one point in time, when I joined the company, the market cap of Greenstone was about $90 million. It grew to over $1 billion. And then by the time I stepped aside, it was back down below $100 million. These investors, we chatted about it. We talked about it. I owned up in terms of what I did wrong and what I should have done differently. And they said, we're going to give you a second chance. Obviously, you know how to create value. You've learned from your mistakes, we think. Let's go ahead and try it again. So they basically handed over a public shell to me that I was allowed to go out and build a board of directors and a management team, secure some shareholders to come in to back the idea. And, 3 of our guiding principles out of the gate at Seabridge, which is the company I now run, is that we will never build mines again. It's a tough business. Most companies that try to do it, they're unsuccessful. We will avoid political risk. You look at our asset base, they're all in North America. And we will look to allocate capital efficiently and try to minimize dilution to our shareholders, something that most of the companies in our space, including the majors, don't really get.
One memorable thing you said to me on the boat last week was you said, I'm a control freak. I'm the CEO and the chairman. What do you mean by that? And what are the pros and cons of being as such?
Well, I've learned that there are really a lot of good people out in the industry. You can't control everything, but you can try and stay on top of things. So my management approach is hire the best people that you can, let them do their job, stay out of their way, but make sure that I'm fully informed in terms of what's going on. And I think if you look at the success Seabridge has had over the past 26 years now, we've delivered on that in terms of bringing in a management team that's capable of advancing assets to scale that we have and building value over the long haul.
So for listeners that may not know anything about Seabridge, your numbers and your investment pitch is kind of off the charts when you compare it to a lot of the juniors, even that I feature on this show. But give us a high-level overview of what you have here in the ground and the proposition it presents to investors.
Yeah, so in 1999, when we launched Seabridge, we took advantage of a very depressed gold market. Gold was about $2.60 an ounce. We believe for different reasons that the gold price would go substantially higher. And our goal was to try and create a leverage and optionality play at higher gold prices. And we've done that through the concept of trying to grow ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide to our shareholders on a per share basis, the better our share price should do. And we've delivered on that. So back in the early days, we took advantage of the down market. The major gold companies were willing to sell assets for pennies on the dollar. One asset we bought early on was a project called KSM in British Columbia that Placer Dome had spent $25 million on. They were walking away from it, and they sold it to us for $200,000. If you fast forward to today, KSM has now become the largest undeveloped gold project in the world in a jurisdiction that's safe in Canada, and it's permitted. In addition to the gold, we have a lot of copper. If you ignore our gold and look at our copper reserves and resources, KSM is actually the 3rd largest undeveloped copper project in the world today. So we provide optionality and exposure to both gold and copper within a public company.
And your numbers are off the charts. I mean, at KSM, it's 160 million gold ounces, right? Total?
Yes, it's mind-blowing. 59 billion pounds of copper, over 900 million ounces of silver, and over 1 billion pounds of molybdenum. Matter of fact, if you look at all of our projects and add up all the metal we have in terms of all resources and reserves and use today's metal prices, each one of our shares is backed by over $9,000 worth of metal in the ground, trading at a share price today of about $15 or $16 a share.
So your share price is down, as I looked, about 30% off of your early 2021 highs. Gold is higher. KSM is de-risked. You even have your permits for KSM. So why the discount?
Well, I think a number of reasons. First of all, gold development stage companies are trading at big discounts to where they should be historically. It's not just Seabridge, it's across the board. But I think in the case of Seabridge, we have worked hard to de-risk KSM, because our goal here is to bring in a major mining company as a partner. We went out and spent over $1 billion now on this project from day one to where we are today. And the last piece of the puzzle was getting a concept known as substantially started, which means that the permits we have in place now are not good for the life of the project. After we achieved that designation, our stock went on a tear. It more than doubled from earlier in the year. And then a month or two later, there have been 2 petitions filed against the designation that we have to defend in court, and that definitely put a crimp on our share price and slowed it down. But since that time, again, our shares are now starting to do what they were designed to do, and that's move with the gold price and other gold equities.
So is it that issue, that legal issue that you're going to court for in the end of September, as well as who will be the JV partner that will help advance this project? Are those the 2 unknown questions that investors are looking at?
Correct. And the court case will be heard at the end of September. So we do expect a solution on that later this year. We think the petitions that have been filed against the designation are ludicrous. If you look at the work that the government did and Seabridge did to get to that designation and the support we have from the larger indigenous groups in the region, the local communities, we're on pretty solid ground. Yeah, but the joint venture is, that's the key question. I've been talking about a joint venture for probably 14 or 15 years. It hasn't happened yet. And if it hasn't happened yet, maybe there's something wrong with the project. So I think we will have a major move in our share price once we announce who our partner is to move KSM forward.
And you have an unknown strategic investor you announced earlier in the year with a recent financing as well.
Correct. I wish I could identify who that is. It's someone that's not just money. It's someone that's aligned with us to move that project forward towards a construction decision.
When you apply a discounted cash flow paradigm to your deposits, as you know, you get to a certain point in anticipated production and you get zero value. But as I was looking through your presentation, I was also thinking, because KSM is so big and people look at it primarily, some of your other huge projects probably get zero value as well. Because there's a saying that I've known to be true over the last 10 years of speculating in mining stocks, is that investors will overpay for mystery, but they will absolutely forget and discount history. You have so much historically discovered copper and gold and resources in the ground. How do you look at that? Because I can look at Snowline, which was a $1.1 billion U.S. market cap for about 7 million ounces discovered in a remote area of the Yukon, versus what you have, and your market cap now is 1.5 billion U.S. How do you look at those things?
Yeah, look, I think Snowline was a new discovery that was very exciting in the marketplace. And at the time, the market was paying for those new discoveries. You're absolutely right. I mean, KSM dwarfs everything else in our portfolio. But in addition to KSM, we have 4 other assets of meaning, one of which is Courageous Lake, which is actually the second largest undeveloped gold project in Canada, with about 11 million ounces of measured and indicated resources. Right now, there's probably nothing in our share price for Courageous Lake because everybody's focusing on KSM. Our job as management is to try and unlock value to our shareholders for all of our assets, including Courageous Lake. And at Courageous Lake, we are now running a process. The most likely outcome of the process will be to spin Courageous Lake out to our shareholders in a separate public vehicle that will give them direct exposure to Courageous Lake beyond just holding Seabridge shares.
Are you considering spinning out a royalty company to your shareholders, as like Great Bear and other companies have done?
No, typically when we look to transact on non-core assets or try to unlock value, we tend to keep royalties or streams or other aspects of the project to give us a further upside. And we've been successful on that. We've done a number of deals in the past. One example was we We bought an asset called Noche Buena early on from Hecla, paid about $4 million to buy this asset. We then sold it a couple of years later after putting $1 million into it to Newmont and Fresnillo for $25 million in cash, which was a great win for us in terms of return on capital. But we kept a small royalty on that. A year later, Fresnillo and Newmont came back to us and we sold them then the royalty for $10 million. So, it's nice if we can even spin out Courageous Lake to our shareholders in a separate vehicle, having Seabridge hang on to a piece of it. Could be a royalty, it could be a stream, or could be some other mechanism.
So you control Seabridge, obviously, but you're also an owner and you think like an owner because you think in a value per share basis, which many CEOs do not think, and many investors honestly don't even think like that. But in your presentation, you have a slide that points out, I'll say, the value destruction on a per share basis for Kinross, Barrick, and Newmont. Agnico Eagle clearly outperforms. Maybe talk about that trend that we've seen in the gold miners since 2007, and why did that occur, and what needs to happen to change it?
Yeah, I think a lot of it has to do with allocation of capital. The big companies tend to do their transactions at market highs and overpay. And then as the market goes against them, they're forced to try and scale back, sell non-core assets, and that's when they get hurt. So people buy a gold stock with the expectation that if gold is up 10%, the gold share should be up more than 10%. If you look at history, though, so since we started Seabridge, for example, in 1999, the price of gold is up 1,000%. Great. Our share price is up over 6,000%. Fantastic. We've delivered on the concept of optionality. Barrick is up 28% last time I looked. Kinross is up 133%. Newmont is up 189% compared to a gold price increase of 1,000%. What went wrong? We think it's per share metrics. These big companies, you would think that they don't dilute their shareholders. Nothing could be further from the truth. Since I think 2007, 2008, Newmont, Barrick, Kinross, and Agnico Eagle have more than doubled their share count over the time period. Yet their production and their reserves on a per share basis have gone down precipitously. And I think that's why you've seen the underperformance of these big companies relative to the gold price. Agnico Eagle, as you mentioned, was the one company that has done it great. Yes, they've doubled their share count, but they've more than increased their production base relative to their share count, and they've kept their reserves fairly steady. And I think that's why they have now become the go-to stock. If you're looking for exposure to gold in a senior gold company, buy Agnico Eagle. That's all you need to do because they understand the concept of allocation of capital.
Will human nature repeat itself in this gold upcycle? Will the CEOs in charge of the major gold miners make the mistakes, or will they learn from the last cycle's lesson?
Well, I think investors are hoping they don't make the same mistakes, but you have to also recognize that at different phases of the gold market, shareholders are demanding different things. At market tops, shareholders are saying, we need growth. Where are we going to have growth come from? And that's when the big companies go out and perhaps overpay. We saw that in 2011 and 2012. And then when the market then went against it, gold going from 1,900 down to 1,050, the big gold companies said, oh, I can't do that anymore. I need to go out now and conserve capital, pay dividends, and sell non-core assets. And that's when all the trouble began, I think, in terms of from that top to the bottom. I sure hope that they've gotten it right this time. Time will tell. I know Agnico Eagle definitely has, but we'll see what happens because the elephant in the room for the gold industry is the major gold companies are running out of reserves. Their mine lives that exist today are as short as I've seen it in my career. They're going to need new projects. Where are they going to focus on? We hope in North America where our assets sit, but also on projects that actually can be meaningful and impactful to them. For a Newmont or a Barrick or a Kinross, even to an Agnico Eagle, a mine that's going to produce 200,000 ounces, 300,000 ounces of gold a year doesn't do anything for them anymore. They now need size. And there's very few large assets out there for these big companies to go after. And, at KSM, it's the biggest and the best out there, in my view.
So in the last gold cycle, some of the gold producer CEOs made mistakes listening to their investors and the pressure from those investors. So my question to you is, when do you listen to your investors? When do you ignore your investors? What can you share with us from the CEO's vantage point?
I never ignore our investors. I'm always in communication.
And you even run investor relations for a New York exchange listed company, don't you?
I am the point guy for the company. I had a call this morning from a retail shareholder. I don't know how many shares he owns, but that's my job. I mean, I'm the guy. I wear the captain's hat, and if shareholders want to learn more about the company and what's going on and have questions, reach out to me. And I take pride in that. Most of these companies, even smaller mining cap companies, they've got a whole investor relations team. My experience, especially when you're looking at large institutional investors, they don't want to talk to an IR person. They want to talk to the CEO. And I make myself available not only to the large institutions, but also to any shareholder that wants to speak and have questions on Seabridge. I will eventually get back to them if they leave a message.
So with your ear to the ground, when do you listen and when do you ignore the feedback that they give you or the instructions they give you?
Well, sometimes I'll say that's an interesting point of view, but have you thought of it this way? We have we've had a long-standing group of large shareholders that owned us for a long time. I mean, clearly they have a big impact in what we're doing and why we're doing it. But everybody's entitled to their opinion, and I listen to everyone's opinions. And if I don't agree with it, I'll explain why I don't think that makes sense. But I will listen and I will respond.
So in the 26 years that this company, Seabridge, has been in existence, has your operating thesis remained the same? You mentioned you went from an out-of-the-money call option to now an in-the-money call option, but is it essentially the same thesis?
Exactly the same. Our guiding principles that we put in place in 1999 are the same guiding principles we follow today. Never build a mine, partner up projects at the appropriate time if we can unlock value ourselves further from them, focus on the concept of ounces per share, and avoid political risk by focusing only in North America. And I think that's something that our shareholders have appreciate, that we have not tried to change the business plan just because one metal may be doing better than the other or vice versa. So we have been consistent on message. We have followed the same guiding principles, and that's not going to change.
So you've controlled the things you can control, but you have to deal with the things you can't control. But in recent years, a lot of the uncontrollable factors for you have been moving in your favor, haven't they?
Yeah, they have been. I mean, clearly the metal price. One thing that I think people don't fully appreciate. So a few years ago, you looked at the gold industry. Yeah, the big companies were doing okay. They were generating decent cash flows. They were increasing their dividends. They were buying back shares, but they did not have enough cash flow yet to look for their future. Now, for the first time in the gold space, and to a lesser extent the copper markets, these big companies are now generating tremendous amounts of free cash flow. You can only buy back so many shares. You can only dividend out so much. You have to start thinking about your future, and they need to start looking at what comes next for them. So I think how they allocate their capital going forward, they finally have a lot of capital to allocate. How they choose to do it remains to be seen.
And also in regards to KSM, you had paved roads come in, you had power come in, you have your permits, you had a bunch of things work in your favor, and now the metal price is helping as well. A lot of times you can have a good deposit, but with those other things, factors you can't control not happening, you may not get the value out of it.
Yeah, so, because we have been focusing on a joint venture partner for a long time, we've had lots of discussions with the major mining companies that could check the box as a joint venture partner. We've also listened to their feedback, their ideas. What are the risks that they still are concerned about? And then how can we go out and perhaps de-risk the asset to remove that risk from the table? Early on, it was a question whether we actually can even get this project permitted. Well, we got it permitted. Great. That was 2014. We then go to the market 2015 to start to discuss joint ventures again after permits are in hand. And unfortunately, at that point in time, the metal price had dropped from 1900 down to 1050. And that's when the big companies really stepped back and were no longer willing to commit capital for new big projects. They were focusing on fixing their mistakes of the past, selling non-core assets, and paying down debt. We go forward from that point in time, 2016, 2017, things start to look better. 2018, we actually have a fully baked joint venture negotiated with a major mining company. They then came back at the 12th hour wanting to change some key important terms of the agreement with us, which made no sense to us. So we said no. Fine. They then come back a year later with another partner at the table in the syndicate structure, promising us a joint venture term sheet in March of 2020. Well, we know what happened then. COVID hit and the world shut down once again. But, the thing that was standing out there as a risk was, although we have our permits, the permits were set to expire in July of 2016. You can imagine that any major mining company looking at a $6 billion plus investment worries about permits being canceled. So fortunately for us, there's a concept in British Columbia known as substantially started, that by achieving that designation, it means our permits are then good for the life of the project. And what substantially started means is exactly what it sounds like. You've got to go out and demonstrate to the government that you have substantially started the project in terms of building infrastructure that's required. So we went out and secured about $500 million Canadian in 2 tranches. We then spent those dollars building roads, building camps, building fish compensation areas, tying into the power grid, which for us is great because it's all green hydropower, and also building fish compensation areas. Off the back of that, we then filed for substantially started in January of 2024, got the designation in July. Stock was on a tear, major de-risking, box checked, done. Conversation with joint venture partners really pick up again. And then a couple of months later, we had these 2 petitions filed that kind of hurt us in the marketplace. But the big companies that look at KSM as an opportunity recognize that this is just a nuisance issue. We will resolve it. We did all the things right during the substantially started process, as did the government, and now we'll have our day in court. So I think we're now ready to go. The stars are lined up, de-risking done, metal prices at all-time highs, the big companies needing new opportunities, and here we sit with what we think is the world's best. You look at KSM at today's metal prices, we can show a net present value of about $23 billion. We're trading today at a market cap of $1.5 billion. So we're trading at well below 10% of our NAV. Development stage companies in a normal gold market trade at 30 to 40% of their NAV. I understand the reason we're trading at a big discount is I've talked about a joint venture for a number of years. It has not yet happened. Therefore, the discount. When we announce that joint venture partner, which we expect to do before the end of this year, I think we're going to see a major move in our share price because we have finally checked that big box, who's going to build this mine.
And you're currently undergoing negotiations with this unnamed potential partner as we speak?
And 2 others. We have, we call 3 finalists. So we were, over the years, we always said that one of the challenges is that KSM got so big and so complex that there's maybe only 7 companies on the planet that can build it from the gold side plus the copper side. We filtered that down from 7 companies to 3 after we achieved substantially started. And now dialogue is moving forward with a number of those companies towards deal structure and terms.
So for KSM, talent acquisition is almost more important than capital acquisition of the $6 billion. Is that right?
100%. I mean, this is a big, complicated project that once it gets the board okay to go ahead, it's still going to take 5 years to build. There's not many companies out there that can build a project of this scale today, and those are the companies we're focusing on that check that box.
Rudi, have you done a calculation of what your liquidation value is with your market cap only at $1.5 billion? If you were try to sell everything right now, what could you get for the company?
Great question. You're going to get today's share price plus a market premium. A market premium is maybe 30 to 40%. I can tell you without reservation that our biggest, longer-standing shareholders are not happy to sell their shares of Seabridge at today's share price plus that kind of a premium. It just doesn't make sense when you look at the embedded value we really have there that's not yet recognized in the marketplace. And the other nice thing is that insiders control a lot of this company. If you look at our 2 biggest shareholders plus insiders, we speak for over 30% of the stock. So hostile deal will be very challenging to happen. You've got to come through the front door. And our preference is a joint venture where we think we'll get a lot more value to our shareholders than just an outright sale of the company at a market premium.
After speaking with you on the boat last week in preparation for our conversation for the show right now, I watched a webinar in which one of your co-founders is expecting $12,000 US gold per ounce within the next 3 years. So my question for you as an executive is, I know you built the company as an optionality play. Does that 12,000 number expectation factor into the decisions you make for the company, or are you much more conservative when you're making executive decisions for Seabridge?
We're price takers. Whatever the gold price is, we have to live with. That's the fact of life. We're not going to change our business plan just because, we've thought gold was going to go higher throughout the last 26 years, which obviously it has. There are times when gold is not doing well, and you have to admit why it's not doing well and why it's going to change. We think that right now in the current environment, we are setting up for a big move in the gold price above and beyond what we've seen. Gold is now coming back into the center of the global financial system. When Nixon shut the gold window down in 1971, gold was removed from the center of the global financial system, and the U.S. dollar replaced gold in terms of, international trade and in reserves for central banks. That's changing abruptly right now with the BRICS nations wanting to be able to trade outside the dollar system, with central banks looking and selling their treasuries and buying physical gold with that. Gold is now coming back front and center to the global financial system. If you look at the amount of, global assets in the world today, financial assets, it's $400 trillion worth of global financial assets. Today, all the gold ever mined from the beginning of time is worth about 20 trillion. So gold represents only about 5% of the underlying value of global financial assets. Back in 1981 and for a long period of time before that, gold represented 20 to 30% of global financial assets. We think that is coming back front and center. Right now, the West is under-owned gold. Today, it's less than 1%, by the way, in terms of the West. We believe that as the West comes back and wants exposure to gold, that's when you're going to see a big move in gold mining stocks. It's pretty interesting to look at the relative value of gold in the ground, which obviously, gold in your pocket at, $3,400 an ounce relative to the value of gold mining stocks. If you look at the historic relationship between GDX and GLD, a ratio of gold equities to the price of gold stocks across the board are very cheap. And they're very cheap because those buying gold today, they don't buy mining stocks. They're buying physical gold. Central banks, sovereign wealth funds, family offices away from North America. When the Western investor comes back to gold, which they will, they're the ones that buy mining stocks. And I think you'll see that reconnection between gold equity prices and the gold price.
You've built this company for the last 26 years. When does Rudi Fronk retire? What's the catalyst for you or accomplishments you need to see within Seabridge before you hang it out?
Well, I think three major steps going forward. Number one, get that partnership done and announced. Have the project move forward in the secure hands of a big company. Number two, then get to a construction decision because we still have to complete final feasibility study, which will be phase one of a joint venture. So we want to see the partner make that commitment, board sanctioned decision to go out and build a mine. And then I'd love to be around for first production, which is probably, 7 years from now into the future. So I still have a long road in front of me. I love what I do. I've got a great team, supportive team. They do the hard job. I do the easy job, and we'll go from there. But I have no interest in stepping aside at this point in time until we get the job done.
And your retirement is hung up in Seabridge too. I think you told me 95% of your net worth is within your own stock.
Yes. We're all in on this one. I've got a very patient wife who has supported me all these years. So we're not going anywhere, and we're believers in this. We're fully invested in this, and I'm looking forward to sharing, a lot of upside with our investors.
This interview was not sponsored. The company's website, Seabridge Gold, is SeabridgeGold.com. It trades in Toronto on the big board under the ticker SEA and in New York under the ticker SA. Rudi, very enjoyable conversation, and I really enjoyed meeting you last week, so thank you for coming on the show today.
Bill, same here, and I look forward, if you want to get me back on after we announce our joint venture, happy to get back on with you.